Well, good evening, everyone. There is our beautiful sunset. We're 5:13, so I'm a little bit early. Let's see, who do we have here? Ottawa, India, Paris, Brazil. Very good. Happy Easter. Yes, indeed. For the Christians out there, happy Easter. I don't know if it's a holiday in other religions. Somebody will have to fill me in on that. Uncle Buck in South Jersey, Iowa, Manchester, Columbia, just down the road. Columbia. Well, tonight I think you saw the market outlook from today. The Sunday Sunset live feed will be questions related, anything related to the market or to the market outlook if you have pushback or questions. And then the one on Tuesday night will be CFA related. We'll stick to a schedule so that we know what to expect. What do you think of PCE data? Why is this so significant for Fed rate decisions? PCE is based on what consumers buy. Some things in the CPI consumers just don't pay for. Other people pay for it. And in the PCE, shelter has a much lower weighting. So CPI is a basket of goods in the economy, whether or not consumers buy them. So there may be a product, let's say a lot of healthcare. Consumers don't directly pay for healthcare. They buy healthcare insurance, and the insurance company then pays for the healthcare, but it is something that is part of the general price level. But if we look at what consumers actually pay for, that'll tell us the cost of living for the consumer. And since they don't directly pay for health care, they pay for health insurance, there'd be no point in measuring that. Somebody else pays for health care. So PCE is a better measure of the cost of living faced by the consumer as opposed to the general price level in an economy. That is why the Fed pays much more attention to PCE. Kazakhstan, there we go. How do you think about value investing these days? Is it still a thing in efficient markets? Yeah, I think it is. Well, we have to distinguish what we mean when we say investing or value investing, because there's active and there's passive, right? So if you're just going to buy an index that tracks a value factor, I think growth probably is outperforming at this point. I don't think it takes much to see that if you are riding the AI wave, it's growth. That is a growth play. It's going to be growth companies and the growth index that's going to benefit most from it. If we think we're heading more and more into a digital, more automated world, that tends to be growthier stocks. But if we're going to take an active position in value, like AT&T is value, and I think you can do very well on AT&T selling puts on AT&T. I don't see it really going anywhere, not anywhere significant. Maybe it'll find its way to 20, but I think it finds its way to 17 or 16.50 before 20 because of the data leak this weekend. We'll see how AT&T opens tomorrow morning. But if you're going to be more active and combine options along with value, especially with, if it gets put to you, you're holding something of value. You're holding something that you're not paying a lot for. AT&T has a nice dividend. It's nice to find stocks like that aren't really going up, but they're well supported. They're not going down, and they have some decent enough premium as a percentage of their strike price, along with a nice dividend as well. You can do 20% a year on a stock like that. without owning it very much. You can do, I think, quite well. There's a plane taking off. It's getting near the end of the season, so tourists are going home. Get out. We'll let that one go by. California. Your view on rate cut. I personally think central banks around the world have little choice, especially in developed countries. Given the level of debt, I think they have little choice. And I think it's going to become more obvious as we continue to go forward that it's not demand that's driving inflation. It was always supply, a massive supply constraint. And wherever we do see prices, you can immediately point to supply. Housing, it's not because demand is off the charts. In fact, the level of housing activity compared to 2-3 years ago was lower. It's because supply is so constrained. When you look at copper, for example, that's a supply story. The demand over the last 6 months hasn't necessarily increased, but the supply is what is more and more of a concern. So I think that bouts of inflation going forward will be supply driven. There's very little a central bank can do with supply driven inflation, but they can make situations very bad in developed countries by raising the cost of government debt. And there's a lot of government debt. They can't be blind to that because that is going to affect future economic conditions unless they act now. So I think the natural outcome of all of this, the inevitable outcome, is the zero line again on short-term rates. I think that's probably where we're headed, whether it's spoken or not, whether the FOMC believes that or not. It is, I think, the inevitable outcome. How is your Spanish level since you moved to Costa Rica? Well, I'm in full CFA mode right now, so to take 2 hours a day onto my Spanish gives up 2 hours a day, and there is a deadline. Level 3 for 2025 is released early May, so every time they release the content, it is a mad sprint to the release date. There isn't 2 hours extra a day for that. So I will be picking it up again this fall, but it is getting better. What I do is I have Pluto TV on my iPad, which is free, and I watch South Park in Spanish. And on YouTube, I try as much as possible to put Spanish subtitles on, so I am catching the words in context, which helps me learn faster. So it's getting better. Where do we leave off here? I'm going to try to focus on the market questions. For the Fed to see good inflation data aligning in 3 cut expectations, PCE, core PCE should rise average of 0.17, 0.19 monthly for the rest of 2024. I don't know if they're going to be too concerned about that. Powell really downplayed the CPI read from February, saying, well, you know, it really wasn't that bad. I think they are seeing that they can't wait for all that data to come in. They have to, I think, speak as if the data was already in and that they're fairly convinced. They have to start thinking about, you know, I'm sure Janet Yellen has called them up, or they've had conversations, and she's saying, look, you know, higher for longer. I don't know. I mean, over here at the Treasury, we're a little concerned. You know, there has to be some conversation of just the sheer debt level. To be agnostic to it would be, I think, foolish. To sort of say it's not our issue, I think would be foolish. I think it's not one of their mandates, but it has to be for the long-term health of the U.S. economy. You can't have 20 to 25% of tax revenue going to pay interest. And that's what would happen if you go higher for longer and you wait to see inflation under 2%. That is what would happen. So, you know, I think they have to give way. Of course, this is assuming a stable labor market. Any labor issues might allow for looser inflation targets. So the one interesting take I heard about the data, because macro's been having a hard time for the last year. The data just seems to be abnormally strong, given where we are with interest rates. Yet, when you look at a lot of companies, other than tech companies, take communications and IT out of there, a lot of companies haven't recovered the level of earnings they had 2 years ago. So, what gives here? There must be something. And one thing that was pointed to is if you look at the participation rate in the surveys, because a lot of this data is survey driven, if you look at the participation rate, what used to be in the 60 and 70% participation rate, if you send out 10,000 surveys, you get 6,000 answers, is now in the 30%. And the theory is that those companies and those recipients that are not answering probably have bigger problems to deal with than answer a survey that's coming in. So that you might be getting an effect of leaving out the worst news and only including the good news, because if the participation rate is that low, there must be a reason. And the hypothesis is that if you're not doing well, if you're doing poorly, the last thing you have time for is to fill out these government surveys. You don't have an hour to fill it out and help the government out. You got problems of your own. That's an interesting take, that maybe the data we're seeing is not manipulated data, but very biased data by the nature of those who are responding, and that truly it isn't that good out there. It's an interesting take. The other take is the reason you're not seeing a lot of increase in unemployment is because of gig work. Is rather than, when you lose your job, rather than go on unemployment and collect unemployment, people are becoming Uber drivers, which pays more than unemployment, which, when we look at the data, it's looking like the job market is extraordinarily strong, but in behind, it may not be. I think that's interesting. It's something to think about, because it just doesn't seem to make sense that you could ratchet up interest rates 525 basis points in less than 2 years and create the strongest economy we've seen in how many years? In 15 years. You've created the strongest economy in 15 years by raising interest rates 525 basis points in a very contracted period of time, and created one of the strongest job markets. For economists, for macro people, that's a big head scratcher. It's like, how the fuck did you do that? Everything. I don't know that there's anybody ahead of time that would have said, oh yeah, that'll be the natural outcome. So it's a big head scratcher. So the only thing is, the textbooks are all wrong, something fundamentally has changed in the economy, or the data is suspect. One of the two, right? And Occam's razor, the most logical explanation tends to be the most correct explanation. The data is suspect tends to be the one that you would go to first. Let's see. For Palantir, thanks for the discussion. I think they can't scale due to their customers all need customized solutions, especially government customers. Well, that's an interesting bit of information. Like I say, when I did it, I didn't go through the 10K and do deep dives. Like, I didn't want to take 2 weeks with it because I'm inherently not that interested in it. I just looked at it from a valuation perspective and looked at it over a number of different metrics on valuation. And if they can't scale their costs, then that 39 cents might be a little on the high side, which means they're probably more overvalued. If they hit 39, well, those are the numbers. Those are the forward multiples I put out. They do better, then they're cheaper than what those numbers are. I'm a little suspect on 39. I'm at 14.5 for some reason. When I did some quick math, I got to about 14.5 cents. So I took 39 because I was okay, 39. At 14.5 cents, they're trading at a PEG ratio of 7, a ridiculous multiple. Even at a PEG of 3 is very high, and that's where they are cash adjusted, if you give them credit for the cash. So, are they overvalued? Looks like it. But I don't know the story, so I can't say that they're overvalued because I don't really know the story. But just on valuation metrics, they appear to be overvalued. Opinion on leaving a commission-only job at 24, first job in finance. Don't know enough about you or your situation to know to even provide an answer for that. Sounds like a sales job, obviously, but I just don't know enough about that. I don't think that I would accept a 100% commission job. I also don't think that I would accept a 100% salary job. If I accepted a 100% commission job, I better have full discretion on how I get things done. It better be done my way. But if I have to dance to somebody else's tune that I don't agree with, all on commission, I wouldn't even take the job to begin with. Ottawa. Any views on current geopolitics and their macro implications? Well, I think we got something really interesting going on in Israel this weekend. Is the protest against Netanyahu. Is Israelis, citizens have even had enough of it. Enough is enough. They feel that Netanyahu is leading them down, a very bad path. And more, the world is starting to say, "Look, I think you've made your point. Can we kind of back off a little, like a little humanity here? I mean, the people you're bombing, many of them had nothing to do with this, and like, can we try to save some lives, especially the kids?" And Netanyahu is being adamant that no, we're not stopping. We're not stopping at all. So I think that's a big shift. I think last I read, tens of thousands of people are protesting the Netanyahu government. So that's going to be, we could see some kind of intermediate resolution to that problem. And I think Ukraine and Russia, I said this 2 years ago when they first invaded. I think it was like 2 years ago or maybe a little longer. So when they first invaded, the longer this goes on, the more it will be normalized to the point where supply channels will move around the country, and then it'll just be background noise. Just like Yemen is background noise, it is slowly becoming background noise. Do a live stream on the philosophy of money. Philosophy of money. I don't know if there's a field of study called the philosophy of money. How much is enough? If you have too much, does it mean you're not enjoying life enough? Well, so you got to ask a whole bunch of questions when you say how much is enough. From what perspective is how much enough? So let me give you an example here. Let's say that I'm a farmer and I'm growing corn. And you say, well, how much is enough? Well, if I'm growing corn for myself and my family, yeah, I can measure how much is enough. But I have the ability to grow corn for society. So how much is enough if that's what I'm doing? Well, there is no limit. So if I have the ability above other people to earn more income, that income gets taxed. I am helping society in that particular way because that income is being taxed. If I'm building a business, I'm employing people. I'm investing in, I got enough money. Obviously, I'm probably investing in other businesses. Maybe I'm investing in private equity or venture capital, and they're investing in businesses. So when it comes to that, for an individual who's willing to donate to charity and fund businesses, how much is enough? I say there is no limit. There is no limit for somebody like that. Give them more, and because they're putting it to good use. People with money don't just leave it sitting in a bank account. It is out there, more than likely funding startups through venture capital, being donated to libraries, to art museums, to hospitals, to charities. All people in the 1% donate. All of them donate, and large amounts of money too. That money is invested. So it's not as if it's just sitting in a bank account being hoarded. Even if it was in a bank account, a bank then has that as deposits, and those deposits can be lent out to help people buy cars, buy homes. So there is no limit to how much is enough. I don't think there's a limit to how much is enough. I will say you should tie a question like that to greed, and measure somebody's greed factor, and maybe measure their asshole factor. For somebody who's a complete asshole, I think $10 is too much for them. But for a really great person who benefits society like Warren Buffett, or Bill Gates, I don't think there is a limit to how much is enough, right? I'd rather see them have the money than governments have the money, because they make an impact. They make a change. They have, Buffett's companies operate from a moral center. So yeah, I think you have to qualify that with who has it, right? If there was one gun in the village, who would you want to have it? Now, there's only one gun in the village. How much is enough? Only one person can have it. You can treat that the same as money. You'd want the most responsible person to have the gun in the village, not the worst person, not the most vindictive person, not the asshole, not the evil person, but a good person. You'd want them to have the gun, right? If there's one gun in the, well, it's the same with money, right? Money has no positive or negative qualities to it. It's in the use of it that it gets positive and negative qualities. So give people with positive qualities more of it. I have no problem with that. So I guess that was a bit more philosophical. But I don't know if there is a limit. If you have too much, does it mean you're not enjoying your life? If you have too much, it probably means you're living your best life. You're living a life of meaning, because you can't possibly amass that much wealth without being good at something. And if you're good at that, that's the meaning that you get out of life. I don't think that you get to a point where you go, oh God, I've got so much money, I've lost enjoyment for life now. No, I don't think so. I think that is, again, personality driven. And I think you have to look at the intersection of money and personality. If we say Buffett follows a value quality investment philosophy, and Jim Simmons is a quantitative trader, how would you describe your own investment philosophy? Oh, that's a good one. I think it's a mixture of a whole bunch of different things. But if I had to pick one strategy here and now for the rest of my life and nothing else, it would be value. Hands down, it would be value. Because I can sleep at night as long as I have the options. As long as I can use options, it would be value, because I can create an income stream on top of the return that I get from price appreciation, on top of the return I get from return of capital. Value companies are more often likely to engage in share buybacks along with dividends. So I would take value hands down. If that was the only thing that I could have once and for all, that's what I would take. You said you never let her go once. You said you never let her go once. Did you ever find? I never let her go once. I'm going to need more explanation of that statement. Yeah, I'm going to need a little bit more for that. 2021 SPX at 4,800, market return of 10% are normal. That would anchor us at 10K in 2030. The PV of the market using the same normal rate, same anchors around 57. Have we really returned to norm? Well, that's an interesting perspective. So if you take, I guess my question to you is, if you had 10,000 in 2030, what discount rate are you using? What assumptions are you making in getting there? In your 10% return, is that also including the dividend yield of about 1.8? If it is, the 10,000 price is a price appreciation number, not a price and dividend appreciation number, right? So you would have to say, okay, well, it's not 10% growth. It's the price would grow at 8.2% because I'd have got to take the 1.8 out. And then once you are at 30,000 in 2030, what discount rate are you using? Are you using a different discount rate each year based on the forward curve of, let's say, the 10-year? Or are you using a 10-year rate as of today? So, I guess I think that's an interesting approach, is to say, well, let's go out on the trend and let's bring it back to today to see what it is. But your 10%, what is wrapped up in there? Because your 10,000 is price only, so your growth rate must be price only, and then your discount rate. I think the best way to discount it is probably using the forward curve and discounting it year by year, right? A series of, well, geez, even a series. Well, I guess you could use a series of 1-year rates on the forward curve. But typically you'd use a longer term yield to discount it, like a 30-year. What is your expectation for the 30-year? The average yield of the 30-year over that period of time. What would a minimum personal account size to trade full time? Well, first of all, I'd need to know what you're doing. If you had a paper portfolio of 25,000, what can you do? And does your strategy scale? If you're day trading, that doesn't scale very well. If you're using options on low float stocks or small cap stocks, that also doesn't scale very well. But if you can generate $5,000 in a year on $25,000, that's 20%. So if you had a $500,000 account, you could generate $100,000 income. So I would say, what can you do at 25,000 that is scalable? And then if you only have 100,000 multiplied by 4, that's what you could expect to earn. So you may have to attract, you may have to have a track record and then attract some money under management, friends and family, right, to get to where you need to be. But any business worth starting is going to cost you 100, 200, 300,000. Any business that has a growth element in there is going to cost you money, and you'll be probably cash flow negative and profitless for a couple of years at least. Where to start from portfolio construction and management or sector studies? I think sector studies. The portfolio management is great for showing you how to do certain things, but it doesn't tell you what. The sector studies, at least, you see, you have to come up with underlying stocks to buy, or sell, or sell puts on, or be neutral on. You have to have some, you have to have some cards in your hand. You don't just show up to the table empty-handed and say, okay, let's go long something. Well, what would you go long? If you don't know, you'll end up outsourcing your thinking to Kramer. When he says buy, 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 you'll say that's a good idea. So you should understand the sectors. So I think the sector studies is a good place to start. What's your theory of when they will raise rates based on leading inflation indicators? Raise rates? Raise rates? Who? Central banks are in the process of lowering rates now, not raising rates. I don't, unless you're talking about a specific country. View on Canadian housing market. Prices seem to be out to lunch, but mass immigration and government spending seems to keep prices inflating. Where do you see things going? I see things being supported where they are, if not going higher. You can't compete. A traditional Western lifestyle can't compete with an Eastern lifestyle when you're bidding for housing, because a traditional Western lifestyle usually is, one, two, three people per household. You and your wife, you and your husband, or, a couple kids, and that's it. A traditional Eastern family is multi-generational, with multiple income earners in the house, not just one or two, but multiple. So put that all together, you can't outbid that. So I think it goes higher. I think it continues to go higher, especially if interest rates start coming down, and the Liberals do not seem concerned about lowering the level of permanent immigration at all. So, yeah. But keep in mind, housing prices going up when you have an economy with 70% ownership. Housing prices going up benefit 70% of the population. They're a negative for 30%, but they benefit 70%. So if you believe in democracy, well, democracy rules. Help the 70%, push those prices higher and higher and higher. Help the 70%, right? Is there a way to tell the specific securities the Fed is holding in the duration? Yep. Yeah, just go to, just type in New York Fed, SOMA, SOMA, and you'll get to that balance sheet, and it has different tabs, and you can look at exactly what they're holding, exactly when the maturity date is. You can see, what maturity date of 10 years, of 20 years, of 30 years. You can see exactly what they're holding, right down to the security. Do you think S&P multiple will mean revert? Well, sure, it will, but to what level, right? It is a mean reverting series, but to what level? I don't know. That's the big question. What level will it revert to? Has it got a new level? Is there a new level in the series now? Is 19 to 20 the new level? Is 20 to 21 the new level? Or is the longer term level of 16.5 to 17 the right level? But it will mean revert. At some point, it will mean revert. The question is, where? To what level? 20% tax received to GDP seems like a good policy. That's kind of high. I think the average is, long-term average is about 17, 16, 17, 20 seems a little high, I think. 20%. Why do we have to lower rates? Because the sheer amount of government debt, unless you're willing in your tax dollars to pay for it and to pay higher taxes in the future, you'll have to. If you're perfectly willing to pay higher taxes in the future, you go ahead and vote Democrat, or you go ahead and vote Liberal. And they will increase the size of the debt. If you're perfectly okay with that, then that's what you would do. Well, actually, I shouldn't say that. Voting on either party, you're going to get larger debt anyways. But if you are, let me rephrase that. If you are perfectly okay with paying for it in the future, or your kids paying for it, or your wealth paying for it, then we don't need to lower rates. But somebody somewhere has to pay for it. Every single penny a government spends, every penny has to come from you somewhere. When I say you, I mean the population of the country. It's got to come from you somewhere, because Canada cannot tax an American citizen in Florida. U.S. can't tax a Canadian citizen on our earnings. So it has to come from your own from your own citizens, from your own residents. Every single penny a government spends has got to come from you somewhere at some point in time, period. At the end of the meal, you're going to get a bill. It has to be paid. Period. What's your take on Warren Buffett indicator being at 2 now when it should be at 1? I don't know. There are a lot of things like this, a lot of value indicators. If you're suggesting that some of them are pointing to an overvalued market. I would agree. We're pushing up, heading up to 22 times forward earnings at this point. Yeah, at a 5.5% money market rate, pushing up to 22 times earnings. I would agree that that we're getting to the point of being overvalued. Yeah, the earnings yield is what, 4.5%, under 5% now. We're under 5% on the earnings yield. You know, a 10-year is what, 4.3. So, yeah, I agree we're overvalued. How do you look through all the economic data coming out frequently without getting confused about what's a signal and what's noise? Yeah, there's a lot of data, that oftentimes is meaningless. Right now, I think the only really important things are jobs and inflation, and they're becoming less and less important. But the other data it's hard to rely on the other data given those low participation rates. You start looking at that and you say, yeah, hang on a second, that's I missed all that. I think that's critical. Any statistician will tell you that is a problem. The data becomes less reliable, it becomes more biased. At different times, different data means has higher value. Right now, I think jobs are still the big thing. That's still the big. I think that is more important now than CPI or PCE. And then of course, earnings are the thing, right? We can determine whether or not the fundamentals are unhinged from the price per stock, and there are many stocks in which it is not. Where the price truly does reflect the fundamentals, and they're either undervalued or fairly valued, and there are some where it just does not, where it has become unhinged. Why the rush to lower rates? Well, I've explained that. In your opinion, what's a balanced interest rate for the economy to be healthy? Well, so, it's the same thing as asking what is necessary for a person to be healthy. The first thing I need to ask is, well, how old are they? How tall are they? There's a whole bunch of questions that I would ask first. Same with the economy. What type of economy have we got? I don't think that there is an interest rate to describe an economy once and for all, into the past and into the future. At different points in time, it is a different interest rate for it to be healthy. For the economy to be healthy, you need all sectors of GDP contributing: the C, the I, the G, and the trade balance. If you have excessive interest cost on your debt, the G will have to pull back. The G will not be contributing that much. So obviously, a high interest rate through government spending is not going to be healthy for an economy. So I think we can say that. But what if an economy had no debt? What if a government had no debt? Well, then that would be a different interest rate, right? The higher the debt, the lower the interest rate would have to be, such that you didn't have negative GDP simply because you're extracting so much tax revenue from the economy and not spending it. It's just going to pay off debt or pay the interest on debt, which doesn't, paying the interest on debt's not going to add to GDP. Forecast Magnificent 7 earnings going forward. Oh, is that all? I don't know. Haven't got a clue. Beats the hell out of me. I would just accept the consensus and determine whether or not it makes, whatever the consensus is. The company is aware of what the consensus is. Every company's management is very concerned about their stock prices going up. They will, and they control the accounting process. So there is a higher probability that they will make the consensus and beat the consensus than not. What's your take on insurance companies? CNBC noted the premiums have risen considerably post-COVID, and with high interest rates, they may be a good sector. Yeah, with high interest rates, well, that's P&C, right? Property and casualty usually have very short-term holdings, money market holdings, because their policies are one-year policies, so they try to match their assets with their liabilities. They do have longer-term portfolios that they invest money in, but the majority of their money is short-term, so they are making money market yields right now, and probably higher premiums. And I don't know if there's any reason to believe that property and casualty claims have increased. The value of the property has increased. So housing is far more valuable today than it was in the past. Well, your insurance premiums have to reflect the rising cost of what they're insuring. So I don't know if I would say that they're interesting or a good sector because of that. But I mean, they are getting very good money market rates now. So, maybe in a short term way, sure. On other live streams, you mentioned that you almost never had a full-time job other than university, correct? How did it happen that you became so successful? Because there are two paths that you can go through or go by in an economy. Path number one is you can sell hours of your life for money, which is what most people do. They decide that I will sell 8 hours of my day to this company and I'll get this much in return, along with other benefits as well, but they're selling hours of their life for an income stream. That doesn't really build wealth. The other path is you can sell your ideas for wealth. In other words, build your own businesses. You have an idea and you're going to build a business around that idea. So you're not selling hours of your life, you're selling ideas. I happened to be more entrepreneurial in my life, and that's how that happened. So I think looking back, I've taken the better path, but only in looking back have I decided that I've taken the better path. If nothing worked out and I was, broke because nothing worked out, then I would say I really took the wrong path, but it worked out. Thoughts on the concept higher rates in the USA currently are actually tailwinds for inflation due to both the wealth effect and the percentage weight housing has in CPI. Well, I think higher rates, are inflationary to the extent that they hold back supply that would show up if rates were lower, if financing rates were lower. Maybe you'd have more home builders and smaller home builders. There are thousands of these small home builders that will build 2 or 3 houses a year, and that's it. But they need that financed. That they can't get financing. How many thousands of them are driving Uber right now, waiting for interest rates to go down so they can get some financing to build a spec home to sell it? Right? So higher interest rates reduce the present value of projects, the net present value of projects, because you're discounting those cash flows at higher rates. So a whole bunch of CapEx comes offline, which is supply creating. And it does work on holding back supply. So higher rates can be inflationary. Yes, I can make that argument that it can be inflationary. How do you tweak your portfolio or trading strategy given the upcoming elections in the US? I don't really. not really. It's too early to tell. I don't know really. You know, yeah, it's just too early to tell because the market doesn't seem to be doing much about it right now. The market doesn't seem to be fretting it. Do the 2-year and 10-year CME micro treasury yield contracts have carry embedded in their price? 2YY and 10Y? No, because they're just yields. They're just yields. I noticed when rolling a short March 2Y contract, I had to buy March 4.56 and enter into the April 4.49. So it could be reflecting a forward price for the yield. It's just trading on a forward curve. So in other words, it's not a carry as much as it's a sentiment or an expectation. But yields have no carry because there is nothing to buy and sell. So you can't construct an arbitrage argument with a yield because it's not an asset. Beautiful sunset, amazing view. Yeah, it's going to get better as the sun goes further down. You can't see it now because it's behind the mountains, but as it heads down and over the horizon, which is the Pacific Ocean, way over those mountains, as it crests on the horizon of the Pacific, it reflects right off the Pacific, and that whole sky will turn. Well, tonight should be nice and clear. Will turn really orange and pink and red. So it's only going to get more colorful from here. What do we have? 6 o'clock. Okay. Why do some stocks and companies have options but others don't? Not enough volume, or there wouldn't be enough volume. Yeah. There are quite a few companies that have no options, and even some companies that have options, there really is no point in having options, like DuPont. You'd think that they'd have liquid options, but they do not. There's really no point in having the options. What do you think will happen with the BOJ this week? Well, I don't know. They've had their emergency meeting on Wednesday. They've wagged their finger at the market, but they haven't really done anything. If the yen breaks 152, 150, heads to, much north of 152, I think you can expect intervention. If they don't, they will lose some credibility. I saw you wearing glasses in earlier videos. Did you have laser surgery? Or you just don't wear them any longer? Oh no, I wear glasses to see at a distance. I can see, 10 feet in front of me without a problem. But to see anything at a distance, I can see it. Just it's with glasses, it's nice and clear. Driving at night, forget it. I need glasses. There's no forget it. I'm a mess because I can't see the road, especially with headlights coming in my eyes. I just can't see the road, so I need it to drive, especially at night. And anything at a distance, I like clarity. I like to see it crystal clear. I can see things. I just want to see them clearly. So I wear glasses to see at a distance. Let's see. I keep reading, watching articles, videos regarding a potential thesis. Assume climate change is real and it will affect the economy. What are some ways to invest? Copper. If you think it's real and it's going to affect the economy, if it is real and it does show up, there's going to be a reaction. There's going to be a move to green technologies as fast as you possibly can. All of that takes copper, and a lot more copper than carbon-based forms of electricity. A lot more copper. I should say carbon-based forms of power. I considered REITs due to location and companies doing carbon capture with solutions, hedging by moving, buying safer assets. I just see too many forks on a foggy day planning a long trip. Yeah. Timber REITs, there's another good one. Timber REITs are a good one because every year they don't harvest. They can sell carbon offset credits. So there's a new form of income on timber REITs. Previous market outlook, you spoke of putting attention on analog chips instead of semi. Can you explain your thesis and give a company as an example? So anytime you have a device that has to communicate with the real world, that's not digital anymore, that's analog. Because you have to take information from the real world into the device, then you convert it to digital, then your digital processors can take over from there. So what I'm doing right now, filming this sunset, there has to be chips that take this, and same with my voice, because these are live in the analog world, and there has to be some chip that has to interact with the real world and turn the real world into bits and bytes. Those are analog chips. You want self-driving cars, you're going to need a lot of analog chips. If you want more and more technology embedded in devices that interact with the real world, you're going to need more and more analog chips. I think Texas Instrument is the largest analog chip company out there. So yeah, I would not ignore the analog. Do you think rating agencies will downgrade the notation of France? What do you think about the debt to GDP level? I don't know. I don't know where France sits. How do you decide on allocations if you don't use MVO? Percentage of capital. So no position greater than 4% of your capital. And if you say, well, if I lose 25% of mine, if I buy something at 50 and it gets to 37.50, I'm out. You've lost 1% of your capital. No one position can ever take you down, ever. Usually, if you look at people who blow up, it's usually because they kept betting on a losing hand and they kept increasing the size of their position until it was 100% of their portfolio. Then they had no choice but to win. There was no choice but to win at that point. So if you don't use MVO, you just use a maximum position size. Would you consider AVB? I would. Good long-term holding. The U.S. isn't as attractive as Canada for apartment REITs. So if I had to pick, I would pick Canadian apartment REITs because our immigration policy is far more aggressive than the U.S. as a percentage of the population. And we don't have the amount of overbuilding in the channel with multifamily apartment. So I would probably side more with Canada on that one. Have you ever looked at COT charts for determining entry, exit, and futures? I have looked at the commitment of traders. I don't get a lot of information out of it, but I mean, I have put it on the market outlook and how to read them, how to break them down. It's just I don't get a lot of valuable information out of it. Following up on BR, MSR trade, how do you think of the risk MSTR raises equity? You can raise equity, but you're diluting. Raise as much equity as you want. It won't change the market cap of the company. You'll just lower the price per share. I mean, that's all you'll do is lower the price per share. And to buy more coin, well, it wouldn't matter. If they raise more equity to buy more coin, it wouldn't matter. It would be the same as, well, what if you're long one of the Bitcoin ETFs and they bring in more money to buy more Bitcoin, right? I mean, it wouldn't matter. So no, I don't see that would matter. So let's say they raised, I don't know, 100 million. The market cap would increase by 100 million because you got another 100 million in cash, but the dilution of the shares would mean everybody's price goes down. So if they buy 100 million Bitcoin, it's only 100 million Bitcoin. There would still be a discrepancy between the value you attribute to each Bitcoin that they have versus the price of Bitcoin, right? So it wouldn't matter. I trade a mostly options portfolio on IB, what's a suitable beta delta dollar divided by total net liquidation value ratio? I don't know. I mean, off the top of my head, you say suitable. I have so many more questions. You know, when there is no one number that's suitable for everybody. It's, well, what are your underlyings? Right? What is the volatility in the underlyings that you have? How concentrated are you in those underlyings? The more concentrated you are, the more dangerous the same ratio becomes for somebody who's very diversified. So it's not one thing I can point to. It is a constellation of things. As soon as you bring in the word suitable, that is individual specific and portfolio specific. So sunset's starting to look nice. It's real. I'm looking at it on the feed, and the sky looks really blue at the top, but it's not that blue right now. It's kind of darker, but the orange and the red are really bright. But it's not. You don't see the same brightness in the video, but it'll get brighter. But that's a beautiful look right now. Let's see. Would you still think India is a good choice to invest? For a long period of time, yes. I don't think it's a trading. I don't think I would trade it. I think I would invest in it. The stock market is very restricted to a small group of people. There could be potential problems. Yeah, so I don't know enough about that to make an assessment about that. Such amazing noises. Envy you for such amazing noises as background. Those annoying cicadas, I don't like them. I don't like them. I wish they'd shut up. I like a more peaceful night. Look at that sky right now. Look at that. It's like it's on fire. Isn't that beautiful? Every single night. Well, not every night. Some nights when it's cloudy or rainy, I don't quite get that, but I can't tell you how many nights. This is my view. I got a 180 view of the mountain range, and every night I have this nature's artwork. We gotta wrap up soon here. Some FX brokers offer swap-free positions, allowing interest-free borrowing. It's obviously a CFD, but where do clients profit if not from the actual FX market? I'd have to read more about that. I'm not quite getting what they're doing there. I'd have to read more about how that's structured, so I can give an opinion on that. What is the significance of VAR and ES on the IB platform? VAR is value at risk. It's a 5% value at risk that you have that much at risk that 1 out of every 20 days you'd expect to breach that. When you breach it, the ES, the expected shortfall, is the expectation of what you would lose on one of those days. With current yield on long-term yields for risk-free government bonds, why do investors still invest in rental properties that yield less with higher risk to the cash flows? Well, that is a good question. If you have a 20-year bond yielding 4.5 and you buy it over those 20 years, you'll yield 4.5%, but a house will appreciate in value, and you're hoping that the capital appreciation will exceed what the bond yield would have given you. Thoughts on Lennar stock? What limitation strength do you see in such stocks apart from limited land immigration? Well, I don't know that I would pick on just Lennar as much as home builders. I think I don't know how they're going to handle this, but the big risk I see is if interest rates come down very quickly and there's a lot of pent-up selling of existing homes that hits the market, supply could increase very dramatically. And if you don't get a boost in prices from interest rates because supply increases faster, that could be a problem for Lennar. Oh well, for all home builders, it's a scenario. I don't know how possible that scenario is until you get much below 4%, 4.5%, 4% on the 30-year fixed rate mortgage. GDP so strong, unemployment low. Why do you think we would have to cut 3 times this year? Well, everyone says, well, why cut? Well, why leave rates high? I mean, flip the question around. Why cut? Why leave rates high? Just to pay more interest on the debt? Inflation is coming down. That's not a problem. Why make everybody pay more interest on their debt? And we do live in a world of debt. So it's not a question of why would we cut. It's why wouldn't you cut? All right. Explain why it makes sense to buy back shares when the company's trading below book value. Does it make sense in a corporate finance sense? Well, if they're trading below book value, you'll always add value to the company by buying back a share that's, it's a great use of capital is to buy back a share that's trading below what it's worth. You get an immediate return. Buying back shares reduces the amount of share count, boosts the earnings per share. Even if you can't boost earnings per share on an absolute basis, you'll boost it on a per share basis, which supports a stock price. And management is rewarded in part based on stock price performance. Would you consider now is the time for good exposure on high yield bonds and cyclical companies? I wouldn't touch high yield bonds because you're getting two things in there. You're getting duration and credit spread. What if credit spread works against you? I would, with interest rates set to cut, I would want just pure duration, zero coupon bonds. Buy some 20, 30-year strips, coupon strips or principal strips, or 10-year strips. Try to get as much duration as you can. Got another plane taking off. I'll answer a few more, and then we'll wrap it up. Probably another 10 minutes or so, because that sky is absolutely incredible tonight. Isn't that beautiful? It looks like a big fire on the horizon, doesn't it? It's a beautiful one tonight. Do you have an opinion on North America's ability to expand its onshoring of companies and green energy initiatives based on current electric grid capacity? I don't know that I would ever count out a country that has a lot of capital, right? So the US has a lot of capital. And because they have a lot of capital, they can do what they want to do. They can get done what they want to get done. It's when you have a lack of capital that it becomes difficult. But they have an abundance of capital. So I would never bet against their ability to do what a policy is backing up with tax rebates or tax dollars. I think they'll get that done. Did you consider UK instead of Costa Rica? No, I did not. It's an English-speaking developed country, better tax rates in Canada. Almost anything has better tax rates in Canada. And London is either the top or second largest financial center in the world. No, didn't consider it. Is there a lucky woman in your life? Lucky. It's a good... I like the way you word that a woman would be lucky. No. No. Is there a theory in economics suggesting that interest rates dictate long-term inflation? For instance, if Japan gradually raised rates to 5%, would inflation follow in the long run? No, not really. Not that I'm aware of. Maybe in the Austrian school there might be something there. But in the Keynesian framework, the interest rate is in response to changes in inflation, not a causal factor in inflation. So it doesn't account for that, but it does make room for the possibility that higher interest rates may lead to higher costs that are passed on, from some companies. Do you feel isolated after you moved to Costa Rica? No. How well have you integrated with the locals? Not so much, but I'm just not going to change the way I do things. It's a different culture down here. It's a suboptimal equilibrium, so you would naturally expect certain types of behaviors that would be unacceptable in a developed economy. But being down here, in a suboptimal equilibrium, the question is not how come people behave this way, it's why wouldn't they, right? Why wouldn't they? So you do have to get used to a significant culture shift, and I don't feel like changing the way I behave. So I may not quite fit in all the time. I'm okay with that. How do you keep your social ties, connections, and sense of belonging? Well, I got you guys. I got you guys. I mean, I never feel like I'm alone. Right now, I feel like I'm with a group of people. I don't feel like I'm all alone until you brought it up and I looked around and I realized I'm alone. I don't feel alone. I rarely feel alone. Limited liquidity in the system. It appears mathematical. The ample reserves regime will break sometime in the next 18 months and likely lead to a new high in long-term treasury yields. Thoughts? No, it will not. I don't think that there is limited liquidity. I think liquidity is draining, but from a very high level, we have plenty of liquidity in the system. That there is a balance in the reverse repo says that there is excess liquidity in the repo market and has no place to go, so it's sitting with the Fed. When that gets to zero, then the idea that, well, how do we measure the amount of liquidity in the system at this point? Then I think that you got to have a much more serious conversation. But the Fed will step in easily and fast if they sense any kind of problem at all, like they did in 2019. They stepped in fast and started expanding their balance sheet. The Fed can create whatever liquidity it wants. So being that they can and they will, and they've shown themselves absolutely willing to do it at the drop of a pin, that is the least of my concerns is liquidity. The Fed will step in, snap, easy. Thoughts on Tesla? Challenged. We're going to find out this week, I think, what their delivery numbers are so that we can see what their growth rate is. But it's certainly not going to be the 50%, the 40%, the 30%, the 20%. It keeps coming down. I think, their numbers will show much lower growth that it was supposed to be 50% a year for forever. I think was the $3 trillion call on Tesla. That just can't happen. Let's see, a couple more here. For the MicroStrategy trade, do you have to keep rebalancing your deltas by buying and selling? No, because it is as close to arbitrage as you're going to get. You are long something that holds Bitcoin and you're short something that predominantly holds Bitcoin, right? It predominantly holds Bitcoin. So no, you just have to have equal dollar amounts and let them go. Maybe a loaded question, but how would you manage saving in retirement accounts versus an account that you would use to start a business? Well, I imagine both of them would be low risk. I think the account to start a business would be lower risk because you want that capital, whereas in retirement, I think you would try to get some kind of return. You'd still have some exposure to risk, whether it's 70% bonds, 30% equity, but you'd still have some beta exposure in there. Turn your phone horizontally. Okay, well, let me try that. Let's see what happens when I do that. Orientation is locked. Rotate device back. It's YouTube. YouTube just shut me down right away on that, saying, whoa, are you trying to do a landscape view? Oh, look at that, it did do it, but on my phone, it just came up with a message saying orientation is locked. Yeah, so, London, Ontario, what will happen with cocoa? Yeah, I think cocoa will come back down. I think you have probably a liquidity problem there with those who sold cocoa futures to deliver their crop to have to keep posting margin as the price goes up. So they're just buying to cover their short position, and that's creating this little run up that we have right now. I think that comes down. Let's see, a couple more here. because I've got a live feed for the Applied series in 37 minutes. Ah, there it is. For Applied Sector series, you say you can outperform with consumer staples and discretionary, meaning you can time the market, but only for longer terms. No, what I showed you in there is that if you had a portfolio of just those two sectors, that they did outperform. It did outperform the SPY. So you would use your consumer staples as your bond position, as your 40%, and your consumer discretionary as sort of a leveraged S&P. And over, I showed different time periods. Over different time periods, the combination of those two outperformed SPY. Are you going to trade Coco or MicroStrategy? Not Coco, but MicroStrategy. I'm thinking of calling in $2,500 call on that one, selling the $2,500 call. So new positions this week will be selling 17 puts on AT&T tomorrow on any weakness because of this data breach. If AT&T opens lower tomorrow and is under pressure tomorrow, I will sell the 17 puts. Probably several, I'll sell the Mays, the Junes, the Julys. I'll probably do a series of them, and I'll grab as much premium at the 17 as I can over a number of months. I'll do it. Don't push me. I will. For MicroStrategy, I think a $2,500 call. I think those to me make sense. I don't know that I want to use a lot of capital in being long the Bitcoin ETF and short MicroStrategy. I don't like the borrow. I don't like the potential borrow rate. I mean, that's a floating rate. Every day that's a floating rate. It's 0.48 now, but that could easily go to 20% if this becomes a crowded trade. Now you're paying 20% on a short position. I don't want that. I'd rather do it in the options before the borrow rate becomes excessive, right? Okay, that is it. The sunset is fading away, but man, did we have beautiful colors tonight. It was much more impressive live as I kept looking down at the screen to see what you guys were seeing. It was much more impressive live. So that is it for this week. I'll do another live feed on Tuesday night, but that will be CFA related. And I'd really like to stick to those themes. That any CFA questions, we'll save that for Tuesday. For you level one, for you hopeful level ones, April 4th, Thursday, April 4th, results. You get them this Thursday before Jobs Day, right? So it's a big week for you guys. Level 3, next Thursday, the 11th, you get your results. So you should have a strategy for what you're going to do. We can talk more about that Tuesday night. Tomorrow will be the This Week in CFA video. Tuesday night will be the live feed for it. Wednesday will be the Q&A from the Market Outlook that was posted today. And I have in 34 minutes a live feed for the Applied level on Vimeo. So if you are a Applied level subscriber and you have more questions, that starts in 34 minutes. And yeah, let's call it here. That was a good feed. Hour and 15 minutes. I'd like to keep them to an hour and 15 minutes, and that worked out fine. Okay, I'm gonna hit the X at the top of the screen here, and I will see some of you in maybe 33 minutes, and then for the rest of you, or some of you out there who have CFA questions, I'll see you Tuesday night. Same bat time, same bat channel. Ciao.